Well, let's get more on the markets now with Victoria Scholar in London. She's a market analyst at IG Group. Good to have you back, Victoria. Let's start with oil prices.
Thanks for having me.
Which, as I mentioned, they are dropping at the moment. Tell us, what effect is that having on the stock market?
Well, I mean, we saw oil prices hit the highest level since November on the back of those OPEC supply cuts and also the sanctions on Iran. But as you say, we're seeing them move a little bit lower, and that is weighing on the equity market a bit. You pointed to that report from the International Energy Agency saying that, in fact, markets are adequately supplied. And there was also a report from the American Petroleum Institute which pointed to US crude stocks rising by 6.9 million barrels. That was ahead of expectations, again suggesting that there is more supply out there than previously thought.
Yes, and do you think, though, the effect on oil stocks such as BP and Shell, will that continue to be in line with how crude prices are fluctuating?
Absolutely. I mean, these stocks are highly correlated with the oil price itself. So, I mean, if you were interested in trading the likes of BP and Shell, it is very, very important to keep a close eye on that oil price. I mean, we've been seeing how well oil prices have been doing this year, a sharp rally of around 45% or so since the lows seen back in December. So that's surely a tailwind for those stocks like BP. But remember, we did have that sharp pullback in the oil price towards the end of last year, dropping by around 40% between October and December. But I mean, last year there were calls for $80 oil, possibly $100 oil. It seemed like very exuberant, positive rhetoric when it came to the oil price, and then it all kind of fell apart. So the question is whether we're going to get back up to that enthusiasm around oil, and indeed that enthusiasm for oil stocks as well.
Now, global stocks have also been rattled by signs that Beijing might ease up on their stimulus measures, on signs that the economy is perhaps stabilising. Why is that having an effect on investor sentiment?
Well, at the moment, we saw overnight Chinese equities on the mainland a little bit higher, but the Hang Seng was lower. So it was a bit of a mixed picture in China overnight. But the China-sensitive European mining sector today is down by around 0.5%, partly on the back of some broker downgrades. JP Morgan downgrading its outlook on one of the heavyweights, Anglo American. Also, Goldman Sachs issuing a bearish note on the mining sector. But, I mean, we saw last week that China had that strong GDP print, 6.4% versus expectations for 6.3%, and that raised concerns that the monetary and fiscal stimulus that we've been seeing from the authorities could be clawed back. The general consensus is that that's not going to be good for markets, particularly when the trade tensions haven't yet been resolved.
OK, Victoria Scholar from IG Group, thank you for your analysis as always.